Kevin here, top 100 financial advisor, two-time author, one-time bestseller, and we are here to talk about the stock market. We don't have the benefit of screen share today. It was just acting weird, but I can watch the comments and everything here on the screen, which is a little bit easier and better for me. But as we get started, as always, make sure that you grab your phone, hit the share button, because I know this has been a popular question that has probably been traversing your timeline, Instagram, Twitter, wherever else, for a good chunk of the day. So we're going to go ahead and get started with Apple. There are a few other things that we're going to talk about, which I've been telling you guys about for the better part of this entire week. Actually starting like last Friday or so. So first off, I've been telling you that this week was going to be eventful. Didn't know if it was going to be great, didn't know if it was going to be terrible, but it is going to be eventful, and that's what we've seen. We had a lot of news coming out of Congress about what they're going to do with stimulus checks. We had Apple and Amazon both did extremely well in their earnings, which will likely boost the stock here in the next few days. And then something completely unexpected, at least for me, is Apple is announcing a 4-for-1 stock split. What does that mean? Is it good? Is it bad? Should you buy? Should you sell? We're going to get into that. So first, as always, as you see you don't see it, but top of the description, you'll see a link to sign up for my class. It is free. It is the my how do you start investing, 3 ways to get you started investing today. So you want to make sure you check that out. I'll give you everything you need to know to understand the stock market and start off in the right ways. So first, but right before we get into Apple, let's talk very, very briefly about Kodak, which we talked about yesterday. I was telling you guys that this has, bubble written all over it. Seems like a pump and dump. It was super cheap. Then soared up 3, 4, 5, 600%. And then it starts to fall off. I told you guys just yesterday, this happened with Hertz. This happened with Carver Bank. This happened with a bunch of other companies that are super cheap. Everybody gets into it. It goes up. People love it. And then it's the people, the new investors that, I could double my money. Let me jump into it. And those are the ones who lose. So we just talked about it yesterday. Kodak was down 10% today. And that is not a guarantee that it is going to continuously fall, but the pattern is there. The pattern is 100% clear that this is almost what always happens, where you get a stock that hadn't done well, that's probably going bankrupt, that just was trash. I mean, it was essentially trash for years, and that was Kodak. All of a sudden, it shoots up because they had some news. I think some articles were saying it was up 2,700% for the week. 2,700% for the week, and now it's down 10%, which is big. So we will see. We'll keep tracking. We'll see if it goes all the way back down to the $5 or $6 level. Time will tell. There are a whole bunch of things that could happen, but we're looking at what is the likelihood. What is the likelihood that it will not be that? So we will see here in the next few days. But man, I've been telling you, and I tweeted this out. We'll put this out on Twitter, and we did a whole video on it yesterday. But Hertz, Carver, a lot of these are the same exact patterns. Almost out of nowhere, they blow up. Everybody tries to jump on it, and then by the time you figure it out, it's already done. So if you want to know what really happened, watch The Wolf of Wall Street, and you'll start to see exactly what I'm saying. All right, so that aside, let's go ahead and talk about Apple. We know that Apple announced earnings today. I've been telling you guys about earnings almost all week, and I want to describe what a stock split is, why a company does it, and why it may or may not be important to you. Now, I wanted to give you guys, kind of draw on the screen, but Facebook wouldn't let me do that for some reason. So you guys are going to have to follow along with the words and how things are working. So a stock split is what we call cosmetic. It is like getting a haircut. It doesn't actually change the person, but it makes you feel just a little bit different. But your appearance, you may be more or less attractive to certain people based on how you get your haircut, right? So a stock split for Apple, and let's just round things up. If one share of Apple is $400, one share for $400, which is close to where it is, like $380 right now. If I do a stock split, I now have 4 shares for $100. I have not made or lost any money from a stock split. A stock split, as a holder of the stock, if I already own Apple, which I do, that's not going to make me any more money. So know that. If you wake up and you have Apple, don't think that you are super rich or super poor. It actually doesn't matter. You have not made or lost any money. Essentially, I have 1 share for $400. Now I have 4 shares for $100. That's what essential stock split does. Now, why a company does that is to make their company a little more attractive to sometimes people like me and you. For example, when we talk about Amazon, and people are like, "Oh my God, I don't know if I would ever pay $3,000 a share for Amazon," or I was, now I look stupid, right? I never thought that Amazon would go over $900 a share. I thought $900 a share was expensive. But guess what? You could have said the exact same thing about Apple, but now Apple's doing a 4-for-1 split, which means that now it's just, when you look up, I think it's on the 31st of August, Apple will be down to like 100 or something a share. Now you're not going to lose money, but it looks more attractive. So if Tesla, I don't know where it is now, was $1,700 a share, and they did a split and it's now 200, I might be more prone to buy the stock now because now I don't feel like it's so high. So they have more shares out there and the price comes down to fit the same amount of shares. That's all it is. It is cosmetic. It is not going to make you any more money. However, it could position the company, position is a key word, for more people to feel like they could get into it. Lots of this, please. Glad to see. Oh, so I'm just reading the comments. So yeah, also make sure you hit the share button. All right, so that is essentially what a stock split is. Now there is a regular stock split like we saw with Apple, where it's 4-for-1 or 5-for-1 or what have you. Actually, Apple did a previous stock split, I think in 2014 or so, if I'm not mistaken. Apple used to be like $600 some odd a share, which a lot of people say, oh my God, that's expensive. They did a stock split, it came down. People were buying it. Now doing another stock split to bring it down right around the $100 area. We'll see where it goes from here. But now it just says like, oh, this is affordable, and people are going to jump back into it. They were probably going to jump into it anyway, regardless of the price, for reasons because it's Apple. That's basically what it is, right? But there is a thing called a reverse stock split. And if you go back, I think close to April or May, I actually did a video on this about Chesapeake Energy. They were a company they're an oil company based out of Oklahoma City, and they were very close to bankruptcy. And a reverse stock split is bad news, but it works in the same way, where a stock is super cheap and they will collect all the shares together and make the price a lot higher. For example, Chesapeake, and let me see what date this was. Let's see, this was back April. So yeah, so right around April 15th. So go back and you'll scroll and see those videos. Essentially, they did a 200 or a 1 to 200, so it was backwards, or 200 for one, however you want to say it, stock split. So if you had just one share for $1, you now have 200 shares for the reverse price of that. So that's essentially what it was. So usually when a company is super, super cheap and it's a penny stock, Hertz, for example, Kodak before what it is today, they do the same thing. It was like, look, our shares are really cheap. No one's going to buy us. Because, for me, if it's under $5, it's an automatic red flag. It's probably a shady company. But if they do a reverse stock split, they look better. And then you have to go and really do your research, because as opposed to it being $2 a share, now it's 20, now it's 25, and then you don't automatically get that red flag. So that's essentially what it does. A regular stock split brings down the price of the share. You don't lose any money. Keyword, you're not losing any money. Again, if you got a 4-for-1 stock split, one share, $400. Now I just have 4 shares for $100. Still $400. Doesn't really make a big difference if you already hold the stock. I saw some questions and comments. Should I sell and then go buy more shares? No, don't. If you already own it and you think Apple's a good company, then continue to own it and you just do whatever you were already doing. If you're somebody sitting on the outside and you're considering buying Apple, then do your research and decide whether or not you want to own it. The stock split really doesn't make a big difference because it's Apple. We know they've been a solid company for quite some time. So that is the Apple news. That is the Kodak news today. Wasn't going to hold you long, but I will take questions and comments if you guys have any. Let me know. Any questions about stock splits? We talked about why they're going to do it. We talked about, if you go back the last 3 or 4 days, you'll see all the news we've been covering this week, because it was going to be an eventful week and it ain't over yet. We also saw, and because of the stock split news, I completely forgot about it. We also got the official word about how bad the economy was. It's the worst second quarter we've had in the history of the United States. At least that's what the headlines say. I think the economy drops right around 30 to 33%, which is very significant. But again, we knew this was going to happen. We knew we were already in recession. This further confirmed that, and we got official word of that as well. And everybody knows employment, 40 million, down. People aren't going back to work. We still got the virus. People don't want to wear masks. Things aren't where they're supposed to be. So this we already knew. The market reacted to it worse in the morning, and then things started to get a little bit better as the day went on. So we still got some news tomorrow. Apple and Amazon could be and usually will be some very big significant movers tomorrow on Friday. We will see how things play out. But those are the big stories today. Keep your eye out on Kodak. I'm just interested to see where it goes because I be trying to tell people. But you never want to chase an investment. You are either in beforehand because you know there was a quality company and so on beforehand, and sometimes you just miss, and it's okay. Like the stock market is not a lotto ticket. And if you happen to have Kodak before this week, that was a lotto ticket for you, and great that you won. You won, that's perfect. If you got in the first day it went up and you got your little $50, $60, whatever, great. But now it's too late. So don't try and chase things and get a 4, 5, 600% return just because everybody else is doing it. Like, you're already too late. It's okay. You'll move on to the next one, or you can just get you a quality stock like many of the ones that we talk about almost every day here. All right. Let's go ahead and get to some of the questions. I'm starting to see a lot of them now. How do dividends work in a stock split? It works essentially the same way. Now, I don't know what Apple's dividend is off the top of my head, but for example, if Apple pays, and that may change, but you're still going to get the same amount of money. If Apple pays $1 per share, you're going to get $1 per share. So you're still going to get, which should be the exact same dividend, unless things have changed for any reason. Now, what may have happened is, let's say, they may have paid $4 per share, and now that it's split, you're going to get just $1 for each share that you have. So you're still getting $4. So if I have one share for $400 and they gave me a $4 dividend, then I get my $4. But if that changes and they're now going to pay you, which would make sense, and they're now going to pay you $1 for every share, and you have 4 shares, you're still going to get your $4. So in all likelihood, I don't see that changing for any reason. What if you only hold fractional shares of Apple? Do you still get the 4-for-1 split? Yes, you do. So if you had, the funny thing is, so if you had a 1/4 of a share, and I don't want to get too much into fractions, I used to be a math teacher. So if you had a 1/4 of a share and then they give you, a 4-for-1 stock split, then essentially you get one whole share. Again, it's not going to change anything. Actually, it'd be the other way around. So it's not going to really change anything for you, but you will have more shares. So yes, you will have, you would have one whole share, which is again why I don't want to do fractions without the benefit of a whiteboard. So you have 1/4, now you have a whole share. So you have 4 whole shares, which makes 1. So that's what you would get in that scenario. We didn't know 30%, 10. That's fine. Would have been horrible. 30% nuts. Yeah, pretty much. Very informative. Yes, I appreciate it. So yeah, again, if you already own it, you're going to be okay. If you had a fractional share, which most of us do, I don't know how many fractional shares I have now. The number of shares really don't matter now. But it just makes the stock a lot more attractive. And again, and we've talked about it, I am susceptible to this too. If I see a stock that's like $3,000, like an Amazon or a Tesla that's $1,700 or $2,000, I personally, even though the stock, there's no cap to how high a stock can go. Berkshire Hathaway is like well over $200,000 for every one share. That is a fact. So there's no limit to where it goes. But we feel like, look, if it's at $3,000, it'll never go higher than that. So I'm just going to wait until it comes back down. They say, look, don't worry about that. I'm just going to change the price for you. We'll put more, there will be more shares out there. And now it's going to be easier for people to feel a lot more comfortable owning the stock. So that's essentially what it is. My guess, and this is complete guess, because Apple is a household name and people love their iPhones, they love their Macs, I think they want people to feel like they own it. And this makes it more in the minds of consumers, oh, let me definitely buy the stock since I already have it. That's just a pure guess. But I think they want to make it more liquid, which means people are buying and selling all the time. And again, in the minds of investors, it makes it easier for them to get into. All right, have you ever spoken on how the stock market is holding up so well despite the volatility of things that used to greatly influence such healthcare, employment, so on and so forth? I am puzzled because I keep thinking the market will crash again, but it keeps rallying on? That is a great question, and we did cover it in a way. I don't remember the title of the video, but we did cover it a few weeks ago. And essentially, what I said is, and it's a metaphor I got, I think, from Business Insider, is it's the stock market is very similar to a man or woman walking their dog, where the economy and the stock market are actually two separate things. We tend to conflate the two, but they're actually two completely separate things. The economy is employment. The economy involves politics. The economy is how me and you are actually doing. The stock market is how well is a company doing and how much money are they making, and more importantly, how much we think and how well we think a company is doing. The only reason that Tesla is going up is because people in their minds really think that Elon Musk is some genius and that he is going to do all these amazing things, which may be true. The same thing was true about Steve Jobs, and it actually worked out. The same thing is true about Hertz. The economics of Hertz, the rental car company, was they've been losing money for several years. They were about to go bankrupt, and they're still on their way to bankruptcy. That is the economy, the economics of it. The stock market part of it is irrational. It's about expectation and what we think is going to happen. That's why it soared. The same thing with Kodak. The economics of Kodak is they got a $765 million loan, and they do have things that can make chemicals. However, the stock market, the expectation of it is that it is 2,700% better today or this week than what it was over the last 2 years, or over the last month, which isn't necessarily true. So that's a part of why the two things are different. The expectation is that the numbers will quail off, that things are going to improve, and that hopefully things are going to be better. That's what the stock market is saying, whereas the economy is completely different. One other thing, going back to the metaphor that I actually didn't finish, is that the economy goes on a certain path, and the dog would be the stock market that can go left and go right and go behind you and do all these weird things, but tends to follow the economy at one point or another. So if you have a dog, you can see, like, if you're walking the dog, it's going to go here and there and here and there and there, and it's going to do all types of crazy things. But at the end of the day, it's still going home with you. So they do move together in a way. They just don't move in lockstep. Essentially, the stock market is an expectation. We expect things to be better. And sometimes that is completely irrational. The same irrational thoughts that say that we don't need to wear masks, which, again, not true, or that we're doing well with this response, is the same expectation that regardless of what's happening, we think that, X company is still going to make money. It's still going to be this great giant in the very near future. So that's a part. It's very complicated, but that's a part of what's going on. I apologize for the really long answer, but I hope that answered that question. All right. Would you buy more shares now or wait until the stock split? I mean, personally, it doesn't really make a difference. I would, if it is in your, what we say in yoga, or I say what my wife says in yoga, if it is in your practice, feel free to buy more if you think that Apple is a good stock. Meaning, like, the days I go in, the days I get paid, or I pay myself rather, that's when I'm buying more of everything I already have. So again, whether it's fractional shares or not, let's say I'm putting $100 in, I was going to put in $100 either way. I'm either going to buy one share or a fourth of a share. It don't make no difference. So it's not going to make you any difference whether you get now or later. The argument could be, so that they're going to do the stock split at the end of next month. The argument would be, if you get in now, maybe the stock grows more between now and the end of August and beyond. So that's the argument. Will Apple grow between now and then? I don't know. But I don't think Apple is going to take off higher than what it's already been. It's already been one of the top, 5 or 10 companies over the last several years. So I don't think it makes any difference. If Apple is going to grow, it's going to grow with or without the stock split. The sooner you get in theory, the sooner you get in, the more money you're going to make. So there's that. All right, what does it mean for a stock split in ETFs? I assume no real impact. That is correct. So in your ETF, which is a great question, and I think it was somebody else who actually asked me this, and I'm glad you brought that up, via message me, what happens in my ETF. The exact same thing will be in your ETF. You will likely not notice it at all. Your ETF so for those that don't know, an ETF is a collection of stocks all together. Think of it as, owning a house and owning an entire neighborhood. The ETF is a neighborhood. Apple is just that one house. So what will happen, and taking on this metaphor even more, if the Apple house, they automatically just get more rooms, the whole neighborhood is really not going to notice or even care how many rooms you add onto your house. And that's essentially what the stock split is. It's adding more shares or adding more rooms to that particular home. So inside of your ETF, which is already one stock of hundreds, you're going to get more shares there of Apple. Again, no financial impact. You go from one share at 400 to 4 shares at 100. You still got $400. So you're really not going to see any huge impact inside of your ETF, but there will be an accounting change there that if you really want to dig into it, you could see. But again, it's not a big deal there. Yeah, that was a great question. I meant to bring that up and did not, so I appreciate that. All right, so I will take like 1 or 2 more questions. Again, if you're new to the stock market and you're trying to figure out where you should start this whole process, a lot of people are like, well, where should I start? What should I buy? I don't want to make a mistake, and you definitely don't want to lose money. I can help you with that and kind of smooth that process out for you. So make sure you go to buildingbread.com/free class. That link is in the description above or below or on the side. I don't know where it is. It's somewhere. So you want to make sure that you do that. And then make sure that you hit the share button, help grow the channel or the feed, or however you want to call it. Because my job is here to help educate you. I want to educate as many people as possible. So make sure you do that. All right. Thank you. Great analogy. I try to specialize in analogies when it comes to the market because things can be a little more confusing than what they need to be. But again, I will take one other question if you have it, and then we'll hop off for today. Thank you for these nightly nuggets. Yes, I'm glad it works. Yeah, I used to do these like weekly, and then things got crazy with the coronavirus. So I'm like, all right, we gotta be on here every day. But it's been fun for me. So I'm glad you guys enjoy it. All right, so I think that is it for me. Thank y'all for coming out. Thank you for sharing. I appreciate it. Make sure that you register for the class if you have not already. It is amazing. It's fun. And I think I may only be teaching this Friday, so I may only do like 2 sessions tomorrow. But I do these almost every day. So we're here around 10 Eastern. We got kids, so you know how that goes. So we try to be here around 10 Eastern. That's 7 on the West Coast. And then I teach classes, buildingbread.com, almost every day. So you can catch me there as well. All right. Thank you guys for coming out. I will see y'all tomorrow. Bye.